Welcome to the DeFi podcast, where we attempt to imagine the future of crypto, because foresight is what makes great investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment. All statements made by hosts or guests are strictly beliefs or point of views and are not recommendations to buy, sell, or hold any security. Hosts or guests may hold certain securities discussed in this podcast.
Hi everyone, this week we have Rai on the show from Echidna. We're going to discuss all the things that are happening in the world. Welcome, Rai.
Thank you for having me, guys.
Thanks for coming on.
So should we start with the markets? Who wants to start?
Crypto's crashing. Let's move on.
Yeah. It's kind of like it's failing the stress test, right? From like a macro perspective, like you have hedge funds defaulting, you have algo stables failing, lenders being insolvent, and I think with the recent the drama with Merit Circle and with YGG, you have people and DAOs voting to not pay their investors token. So there's quite a few things here and there that are popping up from all this, I guess, negative sentiment. So it'll be interesting to see how things progress over the next few months or years. I wouldn't be surprised if there's more regulation along those ends.
Yeah, it's sort of that Warren Buffett quote about when the tide goes down, you see who's been swimming naked. And I think we're seeing that right now. And the sort of contagion, I think will probably keep happening. Who knows, right? We don't know how much interest in reinvesting in the market there is, and we don't know how much sort of bad debt there is that we haven't felt yet. So that's sort of what I'm curious to see over the next couple of weeks. I think it's going to be an interesting couple of weeks.
Yeah, I definitely think the market's going to continue down. I think we've just started to see the beginning of the domino effect that's currently in place. I think the big institutions that are failing right now are eventually going to have an effect on a lot of other people who are in, let's say, debt positions that they currently can't close. And if the prices start going back even lower, then you're going to see all of those people who are currently locked in place and unable to deal with their margins possibly get liquidated. So I think we have some more pain on the way.
And how is this affecting Echidna?
Yeah, I think obviously market sentiment is pretty poor. So in general, there's just a lot less people who are willing to invest, or I guess, quote unquote, take a chance on something new or novel, right? And I think from our perspective, we were really looking forward to voting gauges and Platypus, just because that's kind of where our quote unquote intrinsic value comes in, right? Voting bribes using our VEPTP, and then having stablecoin protocols come and bribe our users and bribe ECD holders to basically fight for emissions to their stablecoin pools, right? But then I think since the UST fiasco, I think the general sentiment with stablecoins isn't that good. And on top of that, I think a lot of TVL has just rotated out of Avalanche in general. And so we're really seeing this sort of, I guess, a lack of liquidity in general on AVAX, especially when it comes to for Platypus, for TJ, for even for the borrowing protocols like Aave, and with layer twos coming out pretty strong, I wouldn't be surprised to see they would probably have some sort of rush program themselves to attract more TVL, right? And so I think when the market does recover, I think reattracting users and capital back into Avalanche and into Echidna or into Platypus won't be as easy as it was, say, compared to early 2021 or late 2021.
Yeah, that's an interesting point. And what was your sort of development plan before the crash, and how is this crash affecting that?
Yeah, so I think since we launched, we were basically just kind of following along what Platypus was doing, right? They mentioned, I think, voting gauges initially. They said they were going to launch voting gauges in May, and so that was kind of what we built our plan around. And then they kind of pushed that back to July, perhaps even August, to accommodate for the NFTs. And so we minted a bunch of NFTs today and yesterday just to see if we can get something good on our hands. And so I think most of the time we've just been kind of working really closely with the Platypus team to develop our features and to make sure that whatever we're doing integrates seamlessly onto their platform, and it also helps our users better manage their personal finances, and so they can get the best returns if they use our platform, right? And so that's just kind of been the plan so far. I think in terms of voting gauges, I think since that's kind of the thing that everyone's waiting for, the Platypus team has mentioned that they were going to launch it in July/August-ish, and so in that regard, we've already started building for that, and I think if all goes well and once we pass, once we have all the pieces ready, it should come out, I'd say maybe like within a week or even less than a week of Platypus deploying the voting gauges.
Before we get further into just more Platypus and Echidna stuff, do you want to tell us about the team behind Echidna?
Sure, yeah. So the core team is our smart contract lead, Ants, so Antman or Ants. He worked on a bunch of DeFi protocols on ETH. He's been around since like 2013, I think, and he's kind of the wizard of the team, so to speak. He designed the protocol, he wrote most of the smart contracts, and so he's quite invaluable in that regard. We also have a front end lead. His name is Workstat, and Workstat he works at an energy company, and they actually use blockchain as part of their core services, but he does front end stuff for us. But so yeah, I think those are kind of the leads of as far as tech goes, right? And then underneath them, we have about 3 to 4 developers working part/full time to help us build everything out. In terms of marketing, there's myself. So I come from a more sort of traditional info marketing, e-commerce marketing background. I started off building sort of marketing funnels. So if you've seen like an ad for like a dog product or like a soap product, or maybe like those like back correcting, the posture correcting things you see on like Facebook and stuff, one of those was my ads, and so that was kind of how I got my start. And I think when I started doing that, that was right when e-commerce kind of took off. And so, but I didn't really get into crypto until maybe I want to say like 2020. I got introduced to through some friends, and I've just been kind of investing, like building a portfolio slowly, and then got into Avalanche around mid 2021. I kind of just stuck around, just kind of observing, investing. I started off just doing a lot of like launches on Avalanche just because I had a thing for, I guess, their project. I thought it was pretty cool, the concept and staking and all that. And then I think when Platypus came out, Workstat reached out to me because we went back in Singapore a while ago, and he was like, hey, you're still marketing stuff? And I was like, yes. And he was like, hey, we were trying to build this Convex for Platypus. And so that's kind of how I got roped in. And so since then, we've just been working pretty closely together. I had to coordinate across, I think, like 3 time zones for the team, but I guess it's been quite a smooth experience. We've had our ups and downs, but it's been quite fun so far. So
What just cutting in for a second, what attracted you to Avalanche?
So this is just my opinion. I think in terms of they operate very similarly to like a traditional Web 2 tech company. Like their branding is quite out in the open. The community is quite tight knit. I think in terms of operations, they're quite. I think they're, for lack of a better phrase, I think they're the most like commercialized. Like the branding, the way they have an office in New York, having a team that's quite vocal and out in the open and constantly constantly posting on social media. I think in terms of just having a presence like on crypto Twitter, I guess that was something that I thought was quite interesting, just because a lot of these other, for example, like ETH, the team that works on ETH, they don't necessarily, like, I know Vitalik writes a lot, but he doesn't necessarily like market Ethereum, so to speak, right? But Avalanche, they really, they really try to put themselves out there. So that was one of the things I thought was quite interesting, or quite novel to me at that time.
I do like the sort of strong leadership direction that Avalabs and especially Goon takes.
I think I would kind of liken it to like a Web 2 tech company, basically. I don't know, like something like the early days of Facebook, right? Just like a really strong core team, and they're also quite active, I think, in terms of just branching out of like the States. I know, they have joint ventures with other companies in like Asia, like with Avatar. They work really closely with them to kind of penetrate the Chinese market. They work closely with, I think, Habit as well to capture the Turkish market. And so I think in that regard, they're quite aggressive. So I guess, like, to Jared's point, that's something that I really liked about Avalanche. I think everyone on Avalanche has this sort of vibe. It's like, oh, we know what we're doing, but we're also we don't take ourselves too seriously.
Cool.
Nice. So just to kind of like lay out the groundwork, why do you think Platypus is important?
Sure. I think there is sort of I'd say there's like 2 really key reasons. First is they're like basically one of the few protocols on Avalanche that guess, aren't a fork, or they kind of really reinvented the wheel, especially when it comes to, the VE model. They basically incorporated, asset liability management into their stable swap and into their algorithm. So that kind of fundamentally changes how liquidity pools are structured and how they work. And so I think just in terms of being innovative and also, I guess, bringing something new to the table, right? I think that's something that kind of solidifies their position as an integral part of Avalanche, so to speak. And then I guess the second half is kind of most stable swaps. I think stable swaps in general tend to just usually attract the most TVL. Almost anybody who trades on any chain will have user touch a stable swap, whether you're farming or just doing simple swaps, right? And so having that present in Avalanche and providing users with a better alternative in terms of yield farming and I guess growing their wealth. I think Platypus also successfully does most of these things quite well. And so I guess those are kind of the general reasons as to why I think Platypus is quite important. And obviously, with the whole curve wars narrative, that was the original intention of Platypus as well, was to like kind of bring that dynamic to Avalanche, especially with the stable coins here and how, I guess, robust DeFi is on Avalanche. But obviously, because of the market, that has kind of dialed back quite a bit. But I still think that the mechanisms are there. It's just, given the market sentiment, it's quite hard to build a narrative around that. So, yeah.
So one other thing, why do you think that Platypus took off on Avalanche as opposed to Curve, for example? Because I never really understood why Curve didn't make a more sort of concerted effort to improve their product on Avalanche and be kind of the dominant stable swap on every chain.
I think from Curve's perspective, they have a lot of TVL from like on ETH, right? And it's one of those things where I guess when I think once you get to a certain point, you kind of get a bit complacent. I would say that Avalanche, yes, it's a promising chain, but relative to ETH, the TVL and I guess the transaction volume just don't really match up. And so I guess from their perspective, maybe it didn't really make a lot of sense to try and like improve their product or I guess do things differently in a way that would attract more users. Just because up until I guess before Platypus launched, they were basically the only stable swap around, right? I think before the market kind of tanked a while back, I think Platypus briefly surpassed Curve in terms of TVL, so that was quite a cause for celebration for the PTP team. But having sort of an AVAX native stable swap, I think it's I'd say that like I think the first thing is probably just bragging rights. Like, hey, we have our own stable swap and it's doing quite well. The tech is more novel. The UI is a lot better. It's something that we, I guess, nurtured and own, and I guess that sense of ownership and that sense of belonging is quite important, especially for a community like Avalanche. And so since Curve wasn't really doing anything in particular to try and outcompete anybody, since there was no need, I guess they kind of just overlooked Platypus. And so Platypus innovated on a few different aspects. They were able to just kind of come up really, really quickly. And obviously, I think the community was quite receptive to what they were doing as well, right? Because it was like, we're bringing something new, we're bringing something completely new. With our liquidity pools, you only have to stake one token to basically farm, which is like something that hasn't really been done in the past, especially
that's a huge improvement.
And it really removes a lot of barriers to scaling a liquidity pool, right? Because you have coins like USDT and USDC, and there's just more USDT and USDC lying around compared to like other stable coins. And so if you're trying to grow liquidity pool, it becomes quite difficult to pair that with like I guess a smaller stable coin or an up and coming stable coin. But with Platypus, some of those constraints are removed or eliminated, and so so there's also innovation in that regard. And so yeah, I think they were a small company, came with a better product. The incumbent wasn't really paying attention, or they didn't really care too much about what was happening, and so they kind of took off quite quickly. And so I guess our team is quite bullish on Platypus in general. So
yeah, I think it might come up to bite Curve in the long run. But anyway, so moving on to Echidna. So why do you think Echidna is important to Platypus? Like what benefit does Platypus itself or do Platypus users get from Echidna existing?
Sure. I think there are a few aspects there, right? I think the first thing would be from a tokenomics perspective, when users deposit PTP onto our platform, or even to Vector for that matter, right? You permanently remove PTP from the market. They're permanently staked to accumulate the PTP, right? And so in that regard, we remove some of the circulating supply. We create deflationary pressure for the token. Token prices go up, yield goes up, and so overall, it's good for the ecosystem in general. Second of all, I think when it comes to DeFi, most early adopters have early adopters of almost all the advantage, right? And so for a new user to come in and say, hey, I want to farm a platypus, but in order for them to build a position or set up their yield farming in a way where it's profitable for them, it becomes quite difficult, obviously, especially in a bull market, right? Because the token could be quite expensive, and you're exposing yourself to risk before you even get necessarily the majority of the returns from a yield farmer perspective. And so I think with Echidna, users can just deposit their stable coins and basically receive an above average yield. And I think the last thing would just be that with Platypus, there's also the sort of the curve war, PTP war narrative, right? And if you're sort of a newcomer or a user of Platypus, but you kind of join the party late, it becomes quite difficult for you to, I guess, profitably participate in the PTP wars. And so Vector and Echidna, I think, offer good alternatives in terms of just being a late joiner. And I guess we're also able to sustain the PTP war, like the guys to sustain the narrative. Obviously, Platypus has voting gauges themselves, and we kind of asked them about, hey, would you consider building your own bribing platform? And they basically said, no, we're just going to focus on building our core product. And so they basically kind of left that really integral part of the whole PTP wars narrative to just external parties, right? And so having Vector and having Echidna, having us come in and help them build that feature out, it basically gives their users more options when it comes to monetizing the voting power they accumulate through farming on Platypus.
Yeah, I do think it's actually a pretty good idea because they can focus on the very specific things that they're good at and they want to focus on. And then it leaves kind of the territory open for other people to come in and build some pretty nice products around it. So it's almost like, benefiting them in the long run, but it also creates kind of a bit of more of a community feel to it and, like the feedback loop and just a lot of interesting dynamics.
If you were bullish on Platypus, what do you think is the best way to play that card? Is it to buy PTP and then go to Echidna and stake it, or would you personally just buy ECD? How would you personally play that?
Personally, but I'm quite biased, right? Because I am working on the project that we're discussing. So I think from a price FDV perspective, I would probably pick Echidna just because it's just more cost efficient that way. I guess if you're a stablecoin protocol or an investor looking to profit off of the PTP wars, we're a really good option just because we do have a lot of the votes, and also it's quite cost efficient in that regard.
So you would buy the ECD token and then you would stake it?
To buy ECD token and lock it, or you can also stake it into the protocol and then farm. But obviously, doing both would net you the most voting power in the long run, right? So yeah.
So really quickly, can you give a brief description of what exactly the voting gauges are and how they work and how they're going to come into play in terms of how it affects Echidna?
Sure. So before voting gauges, Platypus has a sort of fixed amount of PTP that they emit on a monthly basis, right? And currently, that PTP is split among the various liquidity pools that are on Platypus, the main pools and the alt pools. And the allocations to those pools are currently determined by Platypus. And so that's kind of how they've been operating since they began. And once voting gauges are enabled, users will be able to determine those allocations to those various liquidity pools using their VEPTP. It's a part of Platypus governance. And the way it works is instead of just, I think when people hear the word vote, right, the impression they have in their head is, oh, I'm just going to put it there, it's gone forever. But for gauges, it works a little bit differently. With gauges, everything happens in real time. And I can, let's say I have 10 votes, for example, right? I can direct those votes to Moremoney, for example, right? But if for some reason, let's say I decide that I want to move all my stable coins to USDC for some reason, I can actually move those votes from Moremoney into USDC, right? And all that would cost me is some gas and also the trouble of having to go to the interface and make that adjustment, right? And so in that process, those votes are moved, and then that would inherently affect where the PTP goes, basically, in real time.
I guess it also affects your investment and how much you're receiving if you have a large amount invested.
Exactly.
In the system.
Yeah. Exactly. Yeah. So, and so with voting gauges, I think it really accentuates the whole PTP war narrative, right? Because you're going to have sort of stablecoin protocols basically trying to out to reward each other, right? Hey, my pool has better rewards, come to mine. And their stablecoin would say, okay, I have better rewards, come to mine. And so with voting gauges, it really kind of, it takes that dynamic and that relationship to the next level. And so we're quite excited. Obviously, when they mentioned how that was going to work, we were quite excited just because they really thought it through and they really, wanted to make it a thing. So, yeah.
So one of the other things I wanted to ask was, are the voting gauges going to affect Echidna and Vector differently, or are they going to have sort of aligned incentives, and it might affect both of you the same way, or are you guys planning to take different strategies? What's your opinion on this?
I think fundamentally it affects us kind of in the same way, like just because it really gives both of our projects quote unquote intrinsic value, right? Like the whole premise of what we're doing is basically, we're giving you our token in exchange for PTP. And in the future, once voting gauges come live, you can basically use our tokens. You basically have a liquid token that you can trade, and each token carries a certain amount of voting power based on how much VPTP we have. And so I think that initial premise and that fundamental sort of component is there. The main point of difference between us and Vector would be how we structure our governance, right? How we build our governance around voting gauges, right? Because we will have to take into account people trying to game the system, vote dilution, and those kinds of things. And so I guess I'm actually quite interested in seeing how Vector how Vector will design their governance around this as well. But yeah, I think that will probably be the main point of difference.
Could the same situation that's happening with Convex, where Convex is like if one of the two protocols, Vector or Echidna, like had a sizable lead on the other, would it then be able to monetize its vote to a higher degree, or not really, because a vote is a vote, right? So if I have a certain number, even if the other player has a certain percentage higher, it doesn't really affect the value of what I'm offering the public.
Yeah, I think to your point, like a vote is a vote. Obviously, I guess the biggest difference would be just the incentives that both protocols receive. If one protocol has more votes, obviously the majority of incentives will go there, right? But you can also make the argument that since everyone is directing their incentives that way, and everyone's trying to fight for the votes there, it get quite fragmented, and you get less bang for your buck, so to speak, right? So maybe it will be a wiser approach to kind of wait and see how the competition plays out, and I guess choose wisely when it comes to how you want to use your incentives. Speaking from a perspective of a stablecoin protocol, yeah.
There is this kind of theory that one of them might take over or something, but I feel like at no point can one of you actually lose, because you have permanent PTP staked in your system, right? Like it can't go away. So if one, let's say there was a mass exodus of stable coins from one platform to the other, wouldn't that just make your platform or their platform or whoever has less total stable coins actually more attractive, because you'd have all of this built up VEPTP, which would make just your stablecoin deposits like very attractive in terms of how much APR you'd be getting.
Yeah. I think you make a very good point there in terms of just the yields, right? If I'm a stablecoin farmer, Vector has more VEPTP, so everyone's going to be like, hey, I'm going to deposit my stablecoins in the Vector, right? But then up until a certain point, your returns start diminishing, right? And so you would look across and say, hey, actually, it's quite good on the Echidna side too. And I think there's going to be sort of a self-balancing mechanism there, a self-balancing dynamic there. And so I think that's kind of how it's played out recently too, was when it comes to I guess the sort of the main stablecoins, like USDT, USDC. So yeah, to your point, Jared, that was actually, that's kind of how we're seeing it play out too.
Cool. So I've been noticing there's been a lot of turmoil in the stablecoin market recently. Does this kind of worry you at all? Do you think that there's any possibility, if there's any like major crashes or more stablecoins that are just going defunct? Could this cause a problem for Platypus or even for you guys, or are you pretty confident in the way things are going?
Yeah, I think there's sort of two bits to that question, right? The first is kind of the general stablecoin market, and the second is the relationship between stablecoins and Platypus. I think I'll probably answer the Platypus and Echidna part first, just because I think it's just a really straightforward answer. They've been quite since the whole incident with Sifu a while back, when that was all the rage, right? Since MIM, Platypus has done a pretty good job of just separating their main pools from their alt pools. And so because of back when MIM was considered like a main stablecoin, and because of MIM, they had to shut down the protocol for like a few days, and they had like a massive sort of like PR crisis, right? Of like, hey, how could you guys just shut down everything? But then because of that, they basically separated stablecoins that they think aren't as sound relative to like DAI, USDT, USDC, and they basically segregated their stablecoin pools into like main pools and alt pools, right? And I think because of this segregation, they've managed to buy themselves quite a bit of security when it comes to just making sure that things run smoothly, even if a stablecoin basically goes belly up like UST did, right? Obviously, with UST, people who were farming that pool were affected quite terribly, but then it didn't cause the protocol to shut down. People could still swap between stablecoins, and with UST, the contagion was contained, within the UST pool and the USDC pool for UST, right? Because it had its own USDC pool, and so I think with the way they structured things, it was quite smart. And I think, with what happened with UST, it was a good stress test for them, and they passed quite well, I would say. So that's kind of the first part, right? And the second part is, are we worried at all about, the state of stablecoins and potentially another crash coming from stablecoins? Sort of. I think there's a lot of FUD around USDT right now, just with, hedge funds trying to short USDT. People, digging up skeletons and saying, hey, their reporting is quite shady. No one knows actually what they're doing. There's just a lack of transparency, right, relative to like say Circle and USDC. And so I think never say never. There is a possibility that USDT it's possible, not necessarily highly probable, but it is still possible for them to basically trigger something that would initiate another collapse of the market, right? But I think to kind of make a comparison, to kind of look at things from the flip side, right? With UST kind of failing, I think users, even though they're more sort of apprehensive and they're more cautious when it comes to stablecoins, it basically informs users of like, hey, look, algo stablecoins, they're quite cool. They're quite novel, but they might not be the safest store of value when it comes to if you want to just have like a more sort of stable investment with your cryptocurrencies, right? And so users would then look more to like that forces users to do more research. Like if I look into like Moremoney, for example, right, over collateralized, interest bearing, that might not have mattered to me in the past, right? In the past, I would have just looked at Do Kwon, the hype, UST, they're everywhere, Anchor, like 20%, crazy yield. I think people look at the buzzwords and the headlines and go, okay, that's quite good, I'll invest in that, right? But then now, because of what has happened with UST, people are more cautious. And I think because of this change in investor mentality, I think that actually gives room to that creates a lot of room for growth for a lot of like smaller stablecoin protocols that are actually more sound and more quote unquote stable, basically. And so I think it's a bit double edged, obviously. Yeah. So those are just my 2 cents on the situation.
I would just add to that. I think we've seen at Moremoney a lot more interest in getting information, which was previous to the UST crash harder to get out, right? So we have all these features and we have a certain architecture that makes our stablecoin really stable. And I think we're quite proud of it, but that wasn't something that necessarily the market was interested in. But I think that is changing quite rapidly. So yeah, I would echo that point.
Yeah, I do think if you look at the current environment, I think DAI is probably the strongest contender in terms of the stablecoin market. We previously, in a previous podcast, we talked about USDT, especially with SEC and how potentially legal or illegal they are and their practices and their business dealings with Bitfinex and just all these different things. It could mostly be FUD, but I do think that there is some legitimacy to it. I don't know what it is right now. I haven't checked recently, but I know that their market cap has been dropping. And so that, I think, is concerning for something like USDT. I mean, I think similar problems even face USDC. I know a lot of people look at USDC as it looks like a much more, potentially stable solution than USDT. But, if you look at the things happening around Coinbase right now, Coinbase has come out and said that if they were to go bankrupt, that their user funds would probably be kind of just swept away in whatever bankruptcy proceedings might happen. And I don't know why that would not also apply to USDC. And then you just look at the fact that I think they recently laid off like 18% of their staff. which would mean that they're maybe in a bad position right now. So, and their stock is way down, and the crypto's crashing. So, some interesting things to think about.
Yeah.
Thanks, Jared. Thanks for the optimism.
Always.
No, but it's good to be cautious, right? Like obviously, like as someone who's like working on a project, I like to think, oh, it's all sunshine and rainbows. We're gonna keep building. The future is bright. But then I think just having a good dose of reality from time to time again is always good, because I think to Jared's, sorry, go ahead.
Oh no, I was just gonna say, like, I do think like it's not all just gloom and doom, as we would say. It's like it could bring up the possibility that more better projects and better products could actually come into play. Like DAI could get stronger. You could see Moremoney get stronger. You could just see something new emerge from it. I think it would actually be probably a good thing.
Yeah, definitely. It's because USDT and USDC pretty much have they basically have like the majority of the market when it comes to stablecoins, right? And so you can argue, there's Paxos, there's all these other stablecoins, but they don't really come close. And so obviously no one wants the market to tank, or no one wants those coins to crash or do really poorly, but it could open up opportunities for smaller players who are hungrier, have better tech, or based on sort of the failures of the incumbent, right, come up with better ways to create a safer and more decentralized stablecoin for users to enjoy. So definitely.
We'll end it here. Right, thank you so much for coming on the pod. And to anyone who's been watching this far, please follow us and follow us on Twitter and follow us on YouTube and like this video. Again, it will make Jared very happy. Thanks, guys.
Thank you for having me, guys. Yeah, thank you.